Hey everyone, happy Thursday. Patrick Jackson with Mann Mortgage Central Oregon with this week's weekly market updates. Today is June 23rd. It's about 11 a.m. on the West Coast. The sun's out, which puts me in a great mood, and mortgage rates are in a rally mode, which puts me in an even better mood. So really, this all started when the Fed raised their Fed rate by 3/4 of a point a little over a week ago. Since that announcement, mortgage bonds are up over 210 bips, which is quite a bit for us. And U.S. Treasury, the 10-year U.S. Treasury, which had been pushing about 3.5%, is all the way down to about 3.05%, which is a dramatic drop and which is very beneficial for us. This backs up really what the mortgage industry and myself have been saying is that really the main cause of mortgage rates being up has to do with inflation. And by the Fed, raising their rate by 0.75 of a point, that showed that they were taking it seriously, and the markets have reacted accordingly, and our mortgage rates are starting to come down. So, prior to this latest Fed hike, the high point for the average 30-year conventional fixed rate, according to a nationwide survey, had gotten up to 4.28% on June 14th. So that was the high point. Today, it's down to 5.75%. So in a little bit less than 10 days, it's gone down on average across the country with all these different lenders about a half a point, which is obviously a big drop for us and a positive movement for the markets. So now inflation could pop up later this summer. So this is not like, hey, we're good for going forward. There's definitely things in the summer. People travel more, gas prices go up, stuff like that. There's causes that there's things that could cause inflation to pop back up again, and our rates would probably go back up as well. So really, if you have anybody on the fence right now, or if you or yourself are on the fence, today, right now might be the best time to buy, refi, do a cash out refi, anything like that for the foreseeable future, because we're in a nice little rally right now. But like I said, we might see things go back up through the summer before then they come back down as inflation truly gets under control going into the fall. So besides that reasoning, another reason for folks maybe to move forward currently, especially renters, would be that rent stats came out, and currently year over year rent is up about 14% nationwide. And really, that's obviously more than inflation's been, so it's not inflation. And in a lot of markets, that would be more than 14%. 14% will probably be a little low in some of the markets that you guys are watching this from, including my own here in Central Oregon. So obviously those numbers are higher, because of inflation. But another big cause of that is housing inventory. So landlords are seeing an opportunity. They know that there's not a lot out there for people to buy. So they basically see an opportunity, to make more money for themselves, and that's perfectly fine for them to do. That's why they're landlords. But it puts renters in a tough position. So basically, the choice right now is either you keep dealing with landlords, you keep paying the higher rent, and not have control over your housing, and maybe a year from now, though, that same landlord decides to sell, raise your rent even more than you're comfortable with, and you're kind of out there. You don't have any recourse over that. Or B, you kind of come into the housing market, try to make a purchase now, take control of the stability of your housing, so you have full control. You don't have to worry about those situations. And on top of that, it's a great investment. So for me, this seems like an easy answer, but obviously everybody's situation is different, and they have to do what's best for them and their family. So real quick, I wanted to share with you guys May's housing or May's existing home sales. So let's see here. I'll share my screen with you guys. Oh, let's get it up here. All right. So existing home sales in May. So this is not new builds, but existing homes. It looks like they're about 5.41 million units, which was down 3.4% month over month and down 8.6% year over year. Main reasons for it being down month over month and year over year would be prices, lack of inventory. Besides that, our rates obviously have had a huge effect on that. With rates being so up, you have less people looking. So that's the reasoning why those numbers would be down. Nothing to panic over. Inventory, it shows it's up 12.6 month over month. We have all our inventory issues are resolved. As you can see based on this chart, every year inventory goes up because it's selling season. It's when people, they want to get settled before school starts for their kids. So they sell their house in the spring into the early summer. And so we always see this jump. So you can see it every year. A little bit of a weird year right there in the middle of the pandemic. People are probably worried about not being able to find a place, all that kind of stuff. But every year we see a jump. down 4.1% year over year. So really, even though it's up 12.6% month over month, it's down compared to the same time last year by over 4%. So anything you hear in the news about, oh, our inventory issues have been resolved, that's not the case. And you can obviously see that. And that also should keep you confident that, housing, we're not in a bubble, appreciation should still stay historically steady, that kind of stuff. They have about a 2.6 month supply nationwide. Again, that's going to be probably a little bit lower or quite a bit lower depending where you're watching this. 16 days on market, and 88% of listings have been sold in less than a month, so still looks strong there. Median home price is up 14.8% year over year, and to a record of $407,000, a little bit over $407,000 nationwide. So again, strong data there. And looks like about 20% of buyers in May were all cash, so doesn't help me any, but definitely helps you realtors. And about 28% of them were first-time home buyers. So it's still first-time home buyers are still looking to buy, and a lot of that has to do with the way the rental market is. The rental market's lousy. Why deal with the rental market when you can take full control? And again, obviously our rates aren't as low as they were before, and house prices are higher. But as we've shown, in past videos, appreciation still should go up, and being a renter is kind of bad right now. So being a homeowner, even with the rates that are at and prices being higher, you're still taking control of your housing stability and where your family's going to live. So let me get out of here real quick. So that's all I have for you guys today. I hope you guys get out and enjoy the early days of summer. Everybody has a great day, and if you need anything at all, just please let me know. Have a great day, guys. Bye-bye.